Hi everyone, welcome to another episode of Steve's Rants, Raves, and Reviews. Today we're going to talk about something that is so important to many of you out there, and that is hidden implicit fees that are embedded inside packaged products. Now when I refer to packaged products, I'm referring to mutual funds. You all have mutual funds inside your 401k. So I'm going to walk you through a pretend scenario. We're not going to pick on any companies, but let's assume for a minute you inherited $100,000. So you have $100,000 and you're thinking of investing, and you take a look at, maybe the ABC Growth Fund. All right? And you do what any good investor would do. They do a little bit of homework first, they look at the prospectus, and they check out the cost of running this fund. And that is called the expense ratio. So you look at the expense ratio, and the company reports, well, our expense ratio is 1%. And the first thing that you do as a potential investor is exactly what they want you to do at the ABC Growth Fund. And that is simply this. $100,000, 1%, it'll cost me about $1,000 a year to have my money managed with the ABC Growth Fund. But unfortunately, that's not the only expense in many mutual funds. Now, not to say that all mutual funds work this way, and not to say that they're all very expensive and bad investments, but I gotta tell you, there's a bunch of them out there that are pretty darn expensive. So let's continue. In addition to that expense ratio, you may have something called a 12B1 trail fee. And a 12B1 trail fee may be a very innocent, small, little expense like 0.25 of 1%. See, in the industry, we call that, it's just a quarter. It's only a quarter. 0.25 of 1% is a quarter, all right. It's $250 of expense on $100,000 every single year. Now, there may be another cost. There may be something that we see now and then called a mutual fund support fee. And a mutual fund support fee may be a small little expense of 0.1 of 1%. 10 basis points, just 10 points. It's $100 on a $100,000 investment. You know, I should label that over here. Let's take a look at that. $100 right here, 0.25, $250. So far you're at $1,250 plus $100, $1,350, and we haven't even gotten started yet. Let's open the prospectus. Let's go to page 150, if you will. Now, somewhere inside the prospectus, the mutual fund company, the ABC Growth Fund, is going to tell you their methodology of investing. Now, a typical soundbite may sound something like this. Here at the ABC Growth Fund, we have a top-down approach. We're currently managing 1,000 stocks inside our portfolio. And we currently have a 45% turnover ratio. You know, many investors have told me, turnover ratio, I don't really know what that means, nor do I care, because I'm paying 1%. I'm paying $1,000 to have my money managed. So let's take a quick look at turnover ratios, and then we'll discuss this. So 45% turnover means they are actually selling 450 stocks per year. So these are sell orders. And they're not free. There are 450 buy tickets, if you will, or buy orders. And of course, the mutual fund industry cannot buy and sell stocks. They have to use, of course, a brokerage firm, just like everybody else. I'm trying to find my info that I need to put up on the screen to share with you in 1 minute. Okay, so I'm going to come back to that. So anyhow, the mutual fund industry, here, in our example, we've got 900 ticket charges. 900 charges, 900 tickets. Who pays for this? Well, It's not free, of course. And we all know one thing. If you were to buy and sell stock, maybe at a discount brokerage firm, you might pay $5, $7, $8, $9 per trade. Let's assume for just a moment that the mutual fund industry is paying $1 per trade. And we don't know if this is true. This may be too low. It may be too high. But you know what? 900 ticket trades, or 900 ticket charges costing $1 each. That's $900 extra. So we add that over here, and what do we have? We have 1.35, we have 2.25, we have a potential cost of $2,250, and you as the investor assumed you were paying $1,000. This is a quick example of implicit hidden fees. There's actually many examples. I'd like to share them with you, and I'd like to help you find out your true cost of investing. Because remember, if we can reduce this, it's more money that goes back in your pocket. Thanks so much for watching. I'm Steve Holland. Tune in again for a new episode of Rants, Raves, and Reviews.